In this morning's U.S. Bank Economic 360, U.S. Bank Senior Portfolio Manager Mike Denneman joins us with the truth behind an old stock market adage: sell in May and go away. Mike, good morning.
Good morning, Brian.
So is it true that the market performs well in winter and sort of dumps in the summer?
Well, there is something to that, and this is just another of many quirky calendar-based theories that investors have. We hear about the January effect and the Santa Claus rally, so this is a popular summer-themed investment adage: sell in May, go away. Trim your stocks early in summer because they tend to lag when the weather heats up. So that doesn't sound like a very scientific way to make investment decisions, but there is really some validity to that. If you look at this graphic, you can see that going back to the 1920s, on average, stocks have earned twice as much during the fall and the winter than they have during the summer. So naturally, academics have studied this for years, seeing if they could pinpoint some cause and effect why this might occur without having a lot of success. So you hear explanations ranging from the complex, that industrial production is down in summer and that might affect the market, to the very simplistic. It might just be that investors are more concerned with summer vacations and backyard barbecues than they are with trading stocks.
Very interesting. Of course, last summer there were some difficulties in the market.
Absolutely. 2011 was a textbook example of this phenomenon. If you recall, the market started the year very strong and then started to level off in early summer. But then things really unraveled in July and throughout August with the European debt crisis in full swing. But then, almost as if on cue, in mid-autumn, the market started to rally and finished the year on a high note. So we had a strong start, a strong finish, but then that significant lull right in the middle.
Are you expecting the same for 2012?
Well, it might be setting up for another disappointing summer. The market has had a great run to start the year, but there are some signs that that rally might be running out of steam. In addition to that, there are some concerns on the horizon for investors, the changing tax law, the deficit, for instance, and on top of that, it's an election year. Historically, the markets have performed poorly in the months leading up to a presidential election. So I really don't expect a return to the type of extreme volatility we had last year, but it could be setting up for another tough summer for stocks.
Sell in May and go away. Mike Denneman, thanks.
Thanks, Brian.
And thanks to U.S. Bank.